Hi, I'm at the CLSA India conference in Gurgaon, and joining me now is a very influential name who we haven't got it for a very long time now, Chris Wood of CLSA. Chris, thank you very much for joining us and agreeing to giving us time. I'll ask you about India because you've just raised further India overweight. But first on the Trump victory and the bond rate which we are seeing, which is impacting all emerging markets, including India as well, at least in the short term.
Yeah, well, I was expecting a bond sell-off on a Donald Trump victory because Donald Trump's got an incredibly aggressive pro-growth agenda, the details of which were lost in the noise of the election campaign, which tended to focus on more colourful issues and not what his actual policies were. But to be brief, he's advocating aggressive tax cuts, aggressive fiscal spending increases. He's focused on massively increasing infrastructure spending in America, which is basically public sector construction spendings at post-Second World War lows in the US as a percentage of GDP. He's also got a policy of seeking to try and create some tax amnesty deal with US corporates where they bring the estimated $2.5 trillion of corporate cash sitting offshore back into America. The US corporates keep it offshore because they have the highest corporate tax rate in the world. So all this is creating a potential that the growth direction could change and is leading to a bond sell-off where so many investors are positioned for lower for longer, and the 10-year yields now at a key critical technical level or near 2.25%. Yeah, if we break that level, I think the bond riot can continue for a while longer, because clearly we're in the kind of no man's land between the presidential election, but inauguration remains several weeks away.
Sure. Well, you expected a bond ride on Trump victory. There's been a surprise move on the dollar as well. You didn't expect that, and maybe that's impacting the emerging market flows as well?
Yeah, I wouldn't. I have to admit, if you'd asked me before the election was out, my guess would have been that the dollar would sell off because of the very aggressive fiscal spending he's talking about at a time when the US economy has already got quite a lot of debt. But the market's chosen to focus on the bullish side of this, i.e. that potentially US growth could pick up, that the US is going to have higher bond yields relative to other countries, and the market's focusing on the potential positive impact on the dollar of all this money potentially coming back to America from corporate America. So that has definitely triggered a rush for the exits in emerging market debt. This year, emerging market debt has been a very one of the best trades. So it's now the middle of November. People who had made money on this trade are now rushing for the exits before all their profits they make disappear. So that's the dynamic we've seen in places like Brazil, Russia, Indonesia, Turkey are examples of markets where currencies have done well, bond yields have come down, and now those trades are reversing.
Which is why you've tactically cut 2 percentage basis points on Indonesia and added back to India.
Yeah.
You're already very much overweight on India and still very bullish?
Yeah, but I was quite heavily overweight Indonesia too. Sure. In my view, Indonesia is the best example in Asia of a market that had been driven by this rally in emerging market debt. And Indonesia cut its rates 150 basis points this year alone, and the currency has gone up. India, in my view, is structurally less impacted negatively by this emerging market debt sell-off, because India never really profited from it. The rupee hasn't had a big rally this year. But actually, what's interesting right now with this demonetization move announced by Prime Minister Modi is that actually, while that's a negative for equities in the short term, because growth is going to slow, particularly in certain sectors, for the bond market and the currency, we think demonetization is a positive. Sure.
I'll ask you about India-specific sectors and which will get impacted. But one question on the Fed meet in December. It's a consensus view now. There will be a 25 basis point rate hike by Fed in the December policy. You're not too sure about a rate hike by Fed in December. Why so? And what's your view on the rate hike?
Yeah, my view since the start of the year has been no Fed rate hikes. Now, obviously, the consensus view was 4 Fed rate hikes. Obviously, that's not been forthcoming. But based on the last US wage data, where average hourly earnings growth accelerated to the 2.8%, which is the highest year-on-year growth rate since 2009, actually my view then changed that there would be a Fed rate hike in December. Okay. That was before the US presidential election. Fed Chairwoman Yellen is now seeing the dollar rally, bond market sell off. That means a tightening in monetary conditions, which will make her more nervous about raising rates. But frankly, I believe she has to raise rates because it would look political not to.
Sure. Okay. Chris, I know you've been a big Modi fan. You've been writing in your reports as well. A bold move by the government last week in demonetizing the 500 rupee and 1000 rupee notes. What is the first take on that? I know a lot of investors will be asking the question to you as well on that move. And what could be the near-term impact in terms of growth and in terms of liquidity?
Well, my main view on this demonetization move is just that it's an incredibly bold move. Normally such moves only happen in the midst of macroeconomic crises, which is clearly not the case in India. I think our view of our office here, I think, sums it up: short-term pain for long-term gain. The key question now is how quickly they can technically implement the necessary changes, such as recalibrating ATM machines.
I know. Even your strategy spoke about the short-term pain. A lot of market participants are factoring in a GDP cut from 7.4, 7.5% to all the way to 6.5% in Q3, and not more than 7% in Q4. With that sort of cut in the GDP growth and earnings not supportive for the next 2 quarters, is India valuation looking attractive enough for you to still go with?
Indian equities are clearly vulnerable from a growth standpoint right now, because valuations are quite high. The hope was that earnings were finally bottoming and picking up. But there is one compensating factor, that is that the currency should be stable. And we are now forecasting, I believe, 3 rate cuts next year, which is probably not consensus, because what we are anticipating is that this demonetization move will lead to an increase in deposits in the banking system. That should both stabilize the currency, and it should give a greater potential for banks to pass on rate cuts to borrowers, and basically should lead to a further decline in inflation. So that is the positive aspect of the demonetization move, but in the short term it's going to be more positive for bonds than equities. Sure.
I believe this will be a huge negative for real estate and proxy real estate sectors, at least in the near term. And you've been bullish on the Indian property, some of the Indian property stocks. Are you disappointed, or do you think this will now further have pain in the Indian property sector?
No, this is clearly, before this demonetization move, I was of the view, and our office here was of the view, that the property sector was showing signs of bottoming after a protracted downturn, helped by lower rates and the excess supply gradually coming down. I'm talking obviously residential property. So clearly those expectations have now got to be delayed. And in the specific case of property, I think the downturn is likely to be more than 6 months. I think the worst impact will be in the smaller cities, tier 2 cities and lower, where cash transactions are a much bigger part of the overall business. I think the combination of this demonetization and the enforcement of this new real estate law regulating the real estate sector is going to lead to a dramatic consolidation in Indian real estate, which is ultimately extremely bullish for legitimate property developers. But we're going to have a bloodbath of consolidation on a 12-month view.
So which are the other sectors in India which you think can be hugely negatively impacted because of this demonetization?
Well, I think real estate hit the worst. Then obviously there will be negative impacts, but like for cement and housing finance. But to me, these are, and to probably a certain extent, autos. But to me, these are precisely the sectors you want to be owning in India, or you should have been owning. In the case of cement and autos, they've done very well this year. Housing finance was doing well this year, so that's why my Indian portfolio has been doing better than the Asian benchmark. But it's going to get hit, but I'm not going to sell these sectors because the news is already discounted in the market. The issue for me is when do you add to them?
Yeah, I wanted to ask you on this, the India model portfolio that you run. It's been a huge outperformer.
Well, it's not Indian, it's Asian.
It's Asia portfolio.
But it's dominated by
Indian sectors and stocks. within that, I believe you were overweight on financials, auto, cement to some extent, and the properties as well. Anything that changes your perspective in the near term to either sell off or to add more in this correction, either the autos or banks or NBFCs?
Yeah, well, the issue is how much they correct. Sure. But I would be looking from a medium-term basis to add to these areas, because these are the areas which I think you want to own.
Sure. I'm not too sure whether you own the Indian pharma names as well. They've corrected sharply off the highs. Do they give now opportunities to buy? No,
I think Indian pharma probably looks attractive short term because it's more defensive.
Sure.
It's more defensive because it's a sector that's not immediately impacted by this demonetization.
Sure.
So I can see people rotating the sector short term. It's not the sort of area I want to be invested in my portfolio, though, personally, because I'm not on top of it. I want to focus on the straightforward domestic demand stories.
Okay. And they're likely to be under pressure at least in the next 2 quarters.
Yep.
Will you ride that pain, or you think you need to?
My plan right now is to ride that pain, but I'm in the middle of checking this out.
Okay.
I would say one compensating factor is the big listed names tend to be full focus in the biggest cities in terms of real estate, and I would say the real crunch is going to be in the smaller cities where cash is a much bigger part of the, so I'm told, of the transactions.
Sure.
But this is a dramatic move. The other issue raised by the demonetization, if the estimates are true, that 10 to 20, who knows, but the estimates one's hearing is that 10 to 20% of the cash will never be returned.
Sure.
So the question is, does that create a windfall profit for the central bank?
Sure.
And then the question becomes, what is that money used for?
Okay. I know there is a big debate going on that front. The other big sector which has really underperformed, and most of the stocks are at 52-week low, is the IT stocks in India. They've done really well over the last many years in the past, but now it's in a bit of a doldrum. At this valuation, you think there is a lot of value in the Indian IT space? Yeah,
but people are going to be nervous on that because one for just specific issues of whether the growth area is over, but the other issue is obviously Donald Trump.
Sure.
Personally, I don't think Donald Trump's going to be as protectionist as some people are fearing, but clearly that's a risk.
Sure.
In my view, Donald Trump's going to be focused on renegotiating trade deals as opposed to, blanket increases in tariffs. But the fact is, nobody knows for sure, so I think on a 3-month view, that uncertainty will persist.
Sure. So your message to the Indian viewers would be long on Indian markets, the way you've been for a very long time?
Yeah, no, my message to viewers is that this is a fundamentally very long-term positive move. I mean, in fact, it's a dramatic move, but clearly it's got near-term negative implications for growth. But the positive is that it should lead, in our view, to lower interest rates on a sustainable basis, and could also lead to a fundamental structural decline in the fiscal deficit here in India.
Chris, thank you very much for joining us and giving your perspective. Thank you very much.
Thank you.